Welcome to presentation on EXIDE Industries. As a business leader, what is the price trajectory, profitability of operations, near-term prospects, insurance and its impact on return on investment, and the journey from lead to lithium-ion batteries are the aspects we will cover in this presentation. Largest manufacturer and seller of lead acid storage batteries in the country. Multiple sectors to cater to: power, telecom, automobiles, mining, defense, to name a few. Caters to both OEM and replacement market. Brand equity of EXIDE is excellent. Multiple manufacturing facilities in West Bengal, Uttarakhand, Haryana, Maharashtra, and Tamil Nadu. That helps its logistical reach, and that is an advantage to the company. And its distribution network for retail is quite deep into every pocket. Very stable company, professionally managed, focused exclusively on its business, and its major market is domestic. A small offloading by mutual funds is picked up by DIIs, FIIs, and the retail market. Promoters hold about 46%, and there is no issue of any significant share pledge. EXIDE is quite consistent. Starting from 2014, it is in a channel. 2016, then 2017, all ascending. 2018 and peaking in the middle of 2018 before the auto sector slowdown came in April, and it fell down to the lowest level around 125. But the happy news is it is back into the channel and firmly moving northwards, both in terms of sales, that is income, and PBT, although the percentage had dropped from 13 to 10.2. Up to March 20 is more of a consolidation, although there was a fall evident in the last quarter of the year, which was followed by the COVID fears and the drop down in June 20 and September. Revenue 10,829 highest, 8,924 is the lowest. PBT percentage from 13 to 7.9. PBT absolute 1140 fell down to the low of 696, although it has recovered marginally in the subsequent quarter. From Nifty Auto, which was underperforming as compared to Nifty Pharma and Nifty IT, which returned 60% plus during the last 365 days. Auto, metal, and FMCG are laggards. EXIDE Industries is a laggard with a distinction. Lowest in terms of retracement from 104 week high, and considering 365 days change, it ranks the last. 12 months starting from last January coming to mid of this January, it was negative in the first 2 months, writing off about 33% of the price. Then 3 months were a bit bullish and positive, April, May, as well as November, and rest of the months were all with longer wicks at the top, bearish in nature. Hardly 3 rupees increase over a period of 12 months. And if you take the percentage wise, hardly 1% increase. The crossover in the month of end May, but volume supported fall in the month of June, and consolidation all through mid of November. Stochastic RSI is turning bearish, and so also MACD moving down. This is in spite of the positive appearance of the chart. Price is crossing over here firmly, and it is above all moving averages. 20, 50, 100 and 200 are all stacked one above the other. Average price and turnover moving northwards, positive, and delivery percentage and quantity per trade moving southwards. Divergence between average price turnover on one side and delivery percentage and quantity per trade on the other is not taking the stock anywhere. With 20 lakhs built up, around 210 is the resistance point, and built up of about 10 lakh, around 190 is the support level. Both are equidistant from the ATM, but the real message is conveyed by the equilibrium of pain and gain, which is falling below ATM from 200 to 195. The outlook appears bearish. Taking 104 weeks high as the basis, the current level is at 56.8 rupees 200. 207 is 61.8 and 229 with a further high of 22 is at 78.6. But 207 is a very strong resistance level which the price has moved after hitting the line down more than once. Therefore, crossing 207 is very crucial and at the same time very difficult. In December 2019, there is a maximum revenue of 4,500 crores. Maximum profit to date was 77 crores in March 17 and maximum percentage of PBT was 2.3 in 17 and the maximum loss is minus 53 in June 19 with negative return. Worth noting that in the life insurance business of the company, there is an investment of 1,680 crores made in 2014. It constitutes almost 25% of the company's net worth as of today. And from 2014 till now, the return is just next to nothing. This is the classic case of insurance reducing the battery life. A brief comparison of PBT percentage between ARBL and EXIDE. It was 10.7% for ARBL in March 19 and the same was 10.2% for EXIDE. Very close. In the month of September 2020, ARBL PBT percentage is 11.6 and EXIDE is down at 8.1%. And having a look at the absolute figures, 711 crores from 1,128 in case of EXIDE and 730 to 750. All possibilities point at OEM price squeeze and also sluggish market hurting EXIDE more on its PBT percentage. The reasons for the fall in PBT and PBT percentage will help us understand why EXIDE and Amara Raja are getting different levels of support in the market. Going forward, the real challenge will be in establishing lead in lithium ion battery. A very strong business with a wonderful reputation, steadily going forward, ascending trajectory for the channelized price movement on a long-term basis. Company has to withstand OEM squeeze and protect PBT erosion. Bearish near term is only a passing situation. Insurance has been an unproductive investment, hurting the performance of the company as a whole. With all this, the welcome sign is the lead taken with a JV with the Swiss Leclanche for manufacture of ion battery. That should help EXIDE lead in future in terms of turnover, technology and profitability. Hope you liked the video. Kindly share it with your friends. Please let us know your likes, dislikes and comments. If you have not subscribed to the channel, kindly subscribe. Thank you so much. Thanks a lot. This video is for the purpose of information, education and awareness only, and it is not meant to be a solicitation or recommendation to buy, sell or hold securities. Kindly seek the advice of a competent professional before taking any action.